Hello everyone, welcome to the Matrix Capital. Today we're going to talk about the US trade wars, housing market, and the Federal Reserve decision on interest rates. We have groundbreaking news. This video is packed with information, so let's dive into it. Let's begin with international trade. The US has finalized a comprehensive trade agreement with the United Kingdom aiming to ease recent economic tensions caused by global tariff hikes. Key elements include reducing tariffs on British car exports to the United States from 27.5% to 10% for up to 100,000 vehicles, and eliminating tariffs on UK steel exports. In return, the UK will increase imports of US products like beef and ethanol. Interesting details, such as creating a $5 billion opportunity for new exports for US farmers and producers, and this includes a reciprocal tariff rate of 10%, which was announced on Liberation Day. Previous 25% rate for cars dropped to 10%, but that's for the first 100K cars. So the White House shared this important piece with the public about the deal, which shows the United States is making progress. Is Donald Trump winning the trade war? This is something we will see in the coming months, and maybe by the end of the year we'll have more certainty about this. It seems that longer he waits, the more pressure he puts on the other countries, and maybe he's going to end up getting better deals. We can see from this sheet that they published on White House that the deals are not just straightforward. They're going into details, and they're still getting the 10%, but they're also helping the countries. For example, to the UK, like they're not just putting 25% for the cars, they're saying up to 100K cars, we'll only do 10% tariffs, and after that we'll increase it to 25%, which is nice to see. The United States is actually making deals. It's not like China says that United States is bullying them. And there's an interesting news about this as well. Donald Trump just tweeted that he's going to be announcing a major news, and everybody's assuming it's related to China. And we heard that China and United States are in the discussions of making a deal. So if China folds as well and makes a deal with the United States, we might say that maybe Donald Trump is winning or heading in that direction, which is nice to see for Americans and the market. Following the announcement, US stock markets responded positively. The Dow Jones Industrial Average gained over 250 points, while the Nasdaq and S&P 500 also saw significant upside. Today, as I'm recording this video, that uptick is pretty much gone. You can see it here. This is when the announcement came through Thursday, and we had the uptick here, and now it's gone. We can look at the Nasdaq. Nasdaq actually put in higher numbers and held pretty well. And the tech companies seem to be doing better during the tariffs because most of the tech products are excluded from the tariff hikes, which is helping the tech companies to not increase the prices. But some companies are still saying that there will be a price hike due to tariffs, which is understandable. What does all of this mean? United States is making deals with UK and possibly making a deal with China. This means that there is uncertainty in the markets, especially the Federal Reserve said they're just going to be waiting. They kept the rates at 4.5%. Jeremy Powell said they're going to be watching and waiting on the sidelines. So there's an uncertainty going on in the markets as soon as all the tariff talks started. This uncertainty can only be removed if the deals are made. UK is one of the biggest countries in Europe. It's definitely one of the most important ones. And making a deal with the UK is a great sign for the United States. And China is the second one, because a deal with China can remove all the uncertainty. The issue right now with China and tariffs is that most companies are probably not putting in orders because they don't know where this tariff hikes are going to end up. So imagine you're going to put in an order for $1 million worth of products. With tariffs, your cost can increase by 10%, 25%, or for China, it's 125% based on costs. So as a company, you might just want to wait until things get settled. All these things are putting a lot of pressure on China's economy. Reports show that in South China, a lot of factories are struggling because companies are canceling orders or not putting in orders. If deals are made and China and United States can get on good terms and United States makes other deals with other countries, we can actually see improvement in the market and uncertainty getting removed. And this can lead the Federal Reserve to slice the rates a little bit. The Federal Reserve was expected to cut rates 3 times this year, but they have been just waiting and holding the rates at the same level due to the uncertainty. They're expecting an inflation due to tariffs, but we are not really seeing the inflation just yet. And the inflation might come in the coming months because companies might have stocks today and maybe they will increase prices in the future going into the summer, or maybe they will just eat up the extra costs and they will not increase the prices because due to the slowing economy. A lot of people during the uncertainty times, they don't spend money, they don't invest that much because there's a scare going on in the market. And I think Trump really understands that. He's a marketing guy. I mean, he's a guy who comes from stocks. So he understands there has to be a pain for some gain in the future. So this might well be his strategy. Let's go to S&P 500 here. And usually in recession times, 20% can be an indicator of a recession. If we see this here, this drop we received after tariffs were announced is about 20% from the all-time highs. So 20% can be the recession. So a lot of people are talking about, are we in recession? Are we going to get into a recession? The first quarter of the GDP came in negative, and we need another quarter with a negative number to be in a recession. We already had a 20% drop in the markets, and this could mean that recession is already over, or we maybe had a brief recession, and then maybe we will go into a big one in 2026. No one knows. I don't have the crystal ball. No one does, but the uncertainty definitely does not help the markets. We will see if the trade deals come in and then uncertainty gets removed and the market gains some confidence, we might see the all-time highs again. This 20% feels pretty engineered because it happened super quickly. I don't know if we have seen a drop like this in the past that occurred this fast. If you check the date range here, from here to here, so from the all-time high to low, it only happened in about 54 days. The 20% drops do happen during recessions and bear markets for S&P 500, and it takes way longer time. But this one happened pretty fast, which almost seems like it was engineered because Trump announced the tariffs and then next day he eased on it. One day he made a comment about Jeremy Powell, the next day he eased on it. So there's this uncertainty the current administration created, which affects the markets. Once this uncertainty is removed, the S&P 500 can go to all-time highs again, and maybe we won't get the recession that everyone expects. Now that we dived into the trade deals, the Federal Reserve stance, and the uncertainty in the market, how does that affect the prices? I want to dive into the real estate market next. So for the real estate, what we have been seeing over these months, the spring is one of the most popular seasons, and a lot of houses gets listed, a lot of houses usually get sold, but real estate, it's been struggling during the spring. The U.S. housing inventory rose to 1.33 million homes in March, up 8.1% from February and nearly 20% from last year. This gives buyers more options and a lot of homes seeing price cuts. And this is pretty regional. For example, Florida, Texas, Arizona seeing price cuts, but New York doesn't see price cuts that much, and prices even going higher there. So for some states, prices are still staying strong and going up, but for most of the states in the United States, prices are going down. The reason the prices are going down the most is because there's an uncertainty in the markets. Everybody's scared of a recession coming in, and the interest rates from Federal Reserve is 4.5, but the mortgage rates are skyrocketing. The mortgage rate's been up for multi-year now, and they're currently around 6.5%. We can look at the Freddie Mac here. So currently the 30-year mortgage rate is about 6.76%, and then 15 years about 5.89. And we can see it here that mortgage rates been in this level for a while now, and we saw some drop in the fall season of 2024, but most of the time it's been in the high six area, and the lowest we've seen is the 6% in last year September. So we'll see where the prices are going to go, but given the Fed is not cutting the rates and the uncertainty in the markets, it doesn't look very bright for rates to come down anytime soon. Here we're looking at the housing supply in the US market. We can see that it's at 1.8 million currently, and it's up 16% year over year, and new listed homes are up 9.2% year over year at 616K, and median days on the market is 47 days, and it shows that it's up 6 days year over year. If you look at the 5-year of this data, we can see how the market was. If you look at the 5-year data, that we can see, usually it's August time we see all these highs, but there's been a change in the trend. If you can see from this chart, it's after August it usually starts going down for the past 5 years, which is after COVID, since COVID happened. But since 2023, rates been high, and market prices and the home prices have been skyrocketed. So we see that even after August, it takes some time for home inventory to go down. And it's important to note that new home builders are not listing their homes to MLS. And if your home is not on MLS, they're usually not on these data points. So we can see here year over year increase, year over year growth is, you can see in the bottom here, it's been going up consistently. In March, it's 16% up compared to last year's March. And last year's March was 7.6% up from 2023's March. So there's a trend that inventory is going up. And if there's inventory going up, rates are high, and there's uncertainty in the market, so there's less buyer demand, and sellers are getting forced to cut prices to reach the buyer demand. Let's check the housing demand here that we have on redfin.com. We see homes sold above list price is 27%, which is pretty low, I think, compared to the other years. Because in 2021, when market was skyrocketing, homes were sold above listing price more than 50%, 56%. This is crazy data right here. In 2022, it was at 58.8% in May. These are spring seasons. Spring has seen the most price appreciation, and there was demand for housing. Everybody was buying, but after 2022, price has been either staying the same or coming down. And what we saw is that during the springtime, not a lot of people are actually paying above the listing price anymore. The data shows less and less. The year over year growth has been going down. During the fall season, people are not paying above the listing price as well. Let's look at homes with price drops. So it shows that 18.9% of the homes that are listed are slicing their prices to meet the buyer demand. And we see that in October 2022, a lot of homes seen price cuts, about 20%, which is high. And right now we are in spring. The highest number we reached was in October 2022, which was about 20%. And now we're coming to that number in March and maybe in April. we'll get there, but this data doesn't have the April yet. Let's look at the sale to list price. So if this is at 100%, that means everybody's paying whatever the house is listed for. It's currently at 98.8, meaning everybody's paying less than what the house is listed for. I mean, not everybody, but the data shows that not everyone is paying for the home to whatever it's listed at. As we've seen in the data, home inventory is going up, interest rates are high, sellers are cutting prices, and homes are staying on the market longer than they used to. So this creates a buyer market. Homes getting price cuts, homes are not getting sold. For buyer demands to come back, it's almost certain that mortgage rates needs to come down as well, because today affording a house is really expensive. Debt to income ratio is pretty high in the United States, which scares people to buy homes. A lot of people are not confident enough to put a lot of money into a house, given the uncertainty that home prices can fall further. It feels like catching a falling knife. In summary, the US economy is caught in a tug of war. Trade deals bring hope, but tariff impacts, GDP contraction, and cautious consumers raise red flags. Meanwhile, the home inventory is going up. Spring sales have been plummeted. We are seeing one of the worst spring sales in the US history. Sellers are cutting their prices. So 2025 looking to be a good year for people who are waiting on the sidelines to buy a home. The home prices can decline furthermore, and if the deals are made by the United States with other countries, this can remove some of the uncertainty the markets have. Let us know what you think. Are we heading for a recovery or recession? Drop your thoughts in the comments. Don't forget to like, subscribe, and hit the notification bell so you never miss an update from Matrix Capital News. If you don't understand the Matrix, you can never escape it. Thank you for watching.